One of the hardest parts about trading is sticking to a set trading plan. We've all diverged from our plan at least once. Whether that's exiting late, entering early, or moving a stop loss. AI will always stick to that trading plan no matter what. No emotions, no panic, no just this one time I'll move my stop loss. And there's another power that AI brings to the table: machine learning. It's a branch of artificial intelligence that focuses on using data and algorithms to imitate the way humans learn. Think about that for a second. While most traders are stuck using indicators from the 1980s, there's a new breed of tools that actually learn from the market. Having access to these indicators gives you an edge that most retail traders don't have: Adaptive Supertrend on TradingView. Now, if you've used the original Supertrend indicator before, you know it has one major flaw. The calculation is only based on a fixed amount of factor and length for ATR. What does that mean for you? This indicator can't adapt to current market conditions. It's just using a fixed look-back period to calculate whether the line sits above or below price. This new version has the ability to learn from past data and adapt to current market conditions. To add this new supertrend to your chart, click on Indicators and search for Machine Learning Adaptive Supertrend, the one by Algo Alpha. Let me show you what makes this indicator special. Machine learning is introduced here through something called K-means clustering. This is a technique that categorizes market volatility into 3 distinct levels: high, medium, and low. Why does this matter? Because this categorization allows the supertrend to adjust more precisely to varying levels of volatility. In this table, you can see the 3 levels of volatility laid out clearly: high, medium, and low. 3 for high volatility, 2 for medium, and 1 for low. Now watch what happens on the chart. The candles are marked with these numbers based on detected volatility. When you see the number 3, the momentum is absolutely incredible. This is when you want to hold your position. But when it drops to 2, that's your signal to start thinking about closing your positions or at least reducing your size. Looking at the indicator settings, the first option you'll see is the ATR length. This indicator incorporates the average true range, just like the traditional supertrend. To understand the average ATR values associated with different volatility types, we can examine the cluster centroid values in the table. For example, when you're in high volatility with cluster 3, the centroid ATR value is this one. What this tells you is that on average, candles marked with number 3 have an ATR of this value for at least the last 100 bars. For medium volatility with cluster 2, the average ATR is this value. And for low volatility with cluster 1, the average ATR is this one, again calculated over the last 100 bars. Here's something fascinating. Within the past 100 bars, you can see exactly how often each cluster appeared. Cluster number 3 occurred this number of times, cluster number 2 occurred this number of times, and cluster number 1 occurred this number of times. When you're actually using this indicator in your trading, you need to consider both the volatility level and the cluster size. An ideal scenario would be to focus on the highest volatility level with the largest cluster size. Let me give you a practical example. In high volatility markets with cluster 3 showing up, you don't want to make buy or sell decisions if the cluster size for number 3 is the smallest on the table. Instead, make sure it's the largest of the 3 clusters before you pull the trigger. This table also displays the current volatility level for your convenience. Next, we have a trend cloud that changes color between red for bearish trends and green for bullish trends. During transitions between trends, the indicator prints red and green labels to mark the transitions from bearish to bullish and from bullish to bearish. These labels can also be used as buy and sell signals if you want to keep things simple. Let's take a closer look at the settings panel. The ATR length determines the period used for calculating the ATR, while the supertrend factor acts as the multiplier in the supertrend calculation. The training data length is the look-back period, defining how much historical data is used for training. The values displayed here represent percentile values, which are used to set the initial guesses for clustering. You can adjust them to observe how they impact the generated signals. Lastly, you can customize the indicator's appearance by modifying colors to match your chart style. Now let me tell you about the weakness of this indicator. This doesn't perform well in pullbacks or during flat markets. When the market is stuck in a trading range and not trending one way or the other, you're going to encounter many false signals. To filter these false signals during flat markets, like the ones we have right here, there's a simple solution. Add ADX to your chart. That's the average directional index. This helps you distinguish between trending and non-trending markets. When the ADX line is below 20, it shows that the market is not trending. That means you should not enter any trade. Look at all these false signals we have here in this flat market. They're completely filtered by the help of ADX because the ADX line is below 20. Coming in at third place, we have an indicator programmed using a machine learning technique called Nearest Neighbors. This one provides buy and sell labels to help identify market direction. We can access it by searching Machine Learning KKK, New Approach. Select this one, Capissimo. Go ahead and add it to your chart. Right out the gate, we can see that this indicator is extremely good at catching short-term market changes. If we happen to be in a ranging market, this indicator will perform incredibly well as it tries to catch the start of reversals very quickly. Look at what happens here when we're ranging. There's a sell signal appearing before the market has fully transitioned. Due to this reactiveness, when we're in a trending market, the indicator will sometimes provide these false early signals. This is both its strength and its weakness. So when using this indicator, it's best to pair it with a moving average or some other trend detection tool to only execute trades in the long-term trend direction. As a result of how this indicator works, it's ideal for traders who want to get in and out of the market quickly for fast profits. If that's your style, this could be exactly what you're looking for. If we go into the settings of the indicator, we can see that we have a number of options relating to how the data is processed. The important settings that you need to remember here are the indicator option and the filter option. The indicator option controls how many indicators the nearest neighbor algorithm uses to determine the buy and sell signals. The filter option attempts to filter out bad signals. While it's not perfect, it does help significantly. Let me show you what happens if I set the algorithm uses to determine the buy and sell signals. The filter option attempts to filter out bad signals. While it's not perfect, it does help significantly. Let me show you what happens if I set this to none. You'll notice there are a lot more signals now being displayed on the chart, and quite a number of these signals are not good at all. So I would recommend leaving it on both to keep your chart clean and your signals reliable. Once again, this indicator is designed for short-term trading. If you're looking to get in and out of the market quickly, scalping or day trading, this might be a good indicator for you. The drawbacks? The indicator does not do well in holding long-term trends. There are also occasionally times when this indicator will repaint signals in the replay mode due to how signals are processed. That's something you need to be aware of before you start relying on it for live trading.